Well, if rainy days and Mondays always get you down, you were not alone today. On a cold and damp rainy day on Wall Street, stocks dipped lower again, pushed down by tumbling energy prices, which neared fresh 6-year lows by the end of the session. The reason? Global oil supplies continue to outstrip demand. And just today, Goldman Sachs slashed its forecast on oil, calling for even further declines in the prices in the year ahead. At the NYMEX today, domestic oil prices fell another 4%, down $2.29 a barrel, closing at $46, the lowest since April of 2009. Foreign Brent crude was down even more, falling $2.68 a barrel, settling at $47.43, the lowest since March of 2009. With oil prices in free fall, many are asking not just how low can oil go, but how low is too low. Jackie DeAngelis has more.
The crude crush continues with no end in sight. Prices on both sides of the Atlantic now under $50 a barrel. While cheap crude means consumers could save 50 to 75 billion on gas this year, according to AAA, many are wondering how low is too low for oil. The tipping point where the drag on the economy outweighs the pickup in consumer spending.
We're in the beginnings part of the price zone right now that hurts production in a big way and starts to reverberate through the economy, the manufacturing economy especially. It'll be particularly painful if we do break the $40 level, and then if we do break the $33 level, which is my low price target, and we go down into the 20s, then it's going to be a real bleak situation.
Production is just one risk if oil falls too low. The ripple effect is big oil laying off workers and pulling back on hiring.
The number of jobs in the exploration and production industry probably number around 500,000 jobs. The multiplier effect, the support services, the dry cleaners and restaurants and real estate around those jobs add probably another 3 to 4 times. So in theory, upwards of 1.5 million jobs could be at stake.
There's also a global impact. Low oil prices don't just hurt the U.S.
It hits Canada. I mean, it hits Russia, it hits Venezuela. So there could be the makings of a global financial crisis as the fallout from the impact on these countries.
So how low will oil prices go and how long will we stay there? Goldman Sachs adjusting its 2015 price forecast to $47 a barrel and saying we could stay under $45 before the fourth quarter of this year.
I do agree with Goldman Sachs's forecast. When you look at the supply-demand dynamic, it's still heavily skewed towards the supply side, and it doesn't look like it's going to change before the beginning of the summer. So I would expect prices to be low going into the summer.
While supply is key, so is demand, and neither are seen changing anytime soon. For Nightly Business Report, I'm Jackie DeAngelis.